Very unusual day on the Australian share market, both in terms of the large amount of volume going through the market for a Monday and also the size of the falls when the other markets around the region fared relatively well. A lot of the markets in positive territory like Japan as well as China. There were many factors to take into account, but none in isolation really accounted for the fall that we saw on the Australian share market. While the Aussie dollar was down sharply on Friday, during the session today we actually saw a climb pointing to more domestic participation rather than international participation driving down the falls on the Aussie market. I think one of the key concerns of investors at the moment are twofold. One, that we're facing liftoff in the US in December, and certainly the US job numbers on Friday supported that. And secondly, the low growth environment, and we saw China trade numbers coming out on Sunday. Exports were down 6.9%, imports down a massive 18.8%. Not only that, those two commodities that are important to Australia, which are iron ore and coal, we saw a drop in those numbers as well. So if we have a look at iron ore imports, month on month down by 12.3%, year on year down by 4.5%, and coal absolutely horrible here, month on month down 21.4% and year on year down by 30.7%. There's plenty to absorb in terms of company news as well. BHP Billiton, Santos Capital raising, Macquarie Bank, Macquarie Group trading ex-dividend, and of course gold also in a bear market. That gold subsector down 23% from those highs that we only hit on October the 16th. So lots going on, but no one real factor responsible for those big falls we saw today.
Yeah, your thoughts for our equity market as we get closer and closer to that December meeting?
I think the problem is that when you have a look at Australia from an international point of view, we're a developed economy with emerging market characteristics, and at the moment there doesn't seem to be a reason to buy Australia. The risks are certainly building, and the instability that we could potentially see in terms of markets in December, I think, is keeping a lot of international investors away. And I do think the currency is a big impact in terms of the Australian market, but today we saw a really strange thing. And if I can bring up the Australian dollar against the US currency, you can see that it's not the type of pattern that we usually see with international investors selling off Australian equities. Usually the Australian dollar falls, but you can see in this particular case we did see a bit of strength in the Aussie dollar given the falls that we did see in our currency on Friday. So a lot of strange moves. Remember, there's a lot happening in terms of the bond market as well. The 3-year bond yields here in Australia, the highest that we've seen in July. So some volatility in terms of bonds. And just having a look at the top 20 stocks in Australia, the blue chips, we actually saw a year low or a multi-year low reached for many of these stocks, and these are outside of the materials and the energy space. In the materials and the energy space there was BHP Billiton as well as Origin hitting a year low, but outside of that space there was also Telstra today as well as NAB shares. So it's both the high yielding end that's being hit as well as a commodity space. So it looks like a large movement in terms of asset allocation, and because of the currency moves today I would point to it being a larger domestic fund manager rather than an international one.
Look for BHP?
It's pretty horrible. I guess just thinking about what's happened, and it is a pretty depressing situation, both in terms of the human aspect as well as just in terms of thinking through the implications of this disaster. And I guess just from a business point of view, we know that production will be impacted because that Brazilian joint venture is responsible for about 6% of the iron ore output for BHP, which accounts for about 30 million tonnes a year. So we are expecting to see a downgraded guidance to iron ore. And then the cleanup costs, they still don't know the reason for this disaster, so that's going to impact on potential insurance costs there. And you have to say that the progressive dividend policy is under risk at the moment. So it's a pretty horrid time for BHP Billiton. The shares were down by 5.7% in London. They were down by 5.2% in New York. They opened down today in Australia around about 3%, but progressively got worse as the day wore on. So looking at this disaster, I guess just in terms of the market and its reaction, it's finding it hard to quantify at the moment and how long this mine might be out of production. And I think that's one of the key factors, because we know that the market doesn't like uncertainty, but I guess the other potential is that the market does have a tendency to overreact. And there doesn't seem a lot of reasons to buy BHP at the moment. The oil price under pressure, iron ore prices under pressure. We've just seen those recent numbers coming out of China, this horrible disaster that's happened in Brazil, and sometimes these are the right times to be considering these type of investments when absolutely no one wants to touch the stock.